AMC short sellers may be crashing the stock market, and this could be starting tomorrow and heading into next week. The Dow futures are down about 0.5%, but the Asian markets are down 3.34% and about 2%, give or take, on all the other exchanges. And this could be a signal of what is to come in the American markets. So in this video, we are going to be talking about how AMC could be crashing the stock market, or shorts in AMC could be crashing the stock market, how you could potentially make a lot of money in AMC, while at the same time hedging out your long-term portfolios to potentially get rich if we do go through a crash or correction starting here soon. If you hit the head on these crashes or corrections, like I said, you can make a ton of money. So I'm trying to spread this knowledge to as many people as possible that definitely could benefit from hearing this information. But this is not a recommendation. I'm not a financial advisor or a financial planner. I wear pink flannels and talk about stocks and give you guys the information that you do need. So come to your own conclusions. Don't do anything that I do, but I'm going to be showing you guys the trades that I do have and that I put on last week that are going to hit phenomenally well. So if you guys want to be a part of the trades as soon as they are made, make sure to check out the link down below for the buy and sell alerts. It's a great community over there, and we are hitting these monster trades. Like I said, if you want to be a part of it, check that out. Also, if you guys want to get up to $70 in free stock of your choice with no deposit necessary and no need to even link a bank account, check out the link down below for Public. They're one of two other companies that do not route your order flows to Citadel. Obviously, Public, Fidelity, and Merrill Lynch. Those are the only three that do not route your orders to Citadel. So if you guys want to be a part of that, check that out, link down below in the description. Now let's talk about the markets crashing, how you guys can potentially get rich, and what could potentially happen with AMC. Now, first things first, I do want to talk about a little bit of how the futures do work. And from my understanding, they do open at 7 o'clock every single night and 7 o'clock on Sunday. You won't see a huge move in the futures until you obviously open up for the market or get into pre-market hours, and then you'll either see that big drop or the big spike to the upside, right? But the fact we're down about 0.5% on the Dow, 0.4% on the S&P, and 0.20% on the NASDAQ is quite alarming when you do look at the Asian markets that are down 3.52%, guys. Jeez, this is a huge sell-off and is a clear indicator what is to come for the stock market, essentially going into the rest of the week. And keep in mind, some of you guys might not know this, but during the 2008 financial crisis in October, I believe October 15th, you guys can fact check me on this. Let me know down below in the comments how accurate I was with this. But I believe 2008, October 15th, the Japanese markets, they were the first to go on a Sunday. Once we opened up on Monday, it was extremely bloody. Now, like I said, fact check me on that. I might be wrong on the exact date, but that is what happened. So it tends to be a clear indicator of what is going to happen with American markets. Now, I don't expect American markets to fall as much as the Japan markets or the Asian markets, but it is a possibility. And even if the US markets fall half as much as these other markets, all of these trades I'm going to show you guys are going to hit and pay out big. I'm talking at least 1,000% gains. That's $10 into $100. But this is not a recommendation. You could lose all your money with these trades, and they are risky because anything can happen, especially when you are trying to time a crash or correction. It's very unlikely you will be able to time it, but I do think we have a great odds of actually going through this crash or correction here in the next couple of days and next couple of weeks. But first, I want to talk about what could potentially happen to AMC. And like I already said, I do think a lot of short sellers are selling stock in other companies, getting ready to cover their short positions in AMC specifically, but GameStop and all these other meme stocks as well. And this is a typical move you would see if these short sellers were selling stocks, right? If you see billions of dollars being sold in other stocks going into AMC, you're gonna see an inversion, right? Stock market's gonna be down, AMC could be up. Now, where it gets tricky and it's hard to predict is if the whole stock market is selling off, how many apes, how many people are going to start selling shares just because of fear and panic alone. Now, I don't think apes are actually going to be selling their shares, but some weak apes might be selling their shares. Now, if you are a weak ape out there, if you are an ape out there, this is not the time to sell your shares. It is quite the opposite. It is time to hold the line and hold your shares. That is just my opinion, but Nevertheless, anything can happen investing in the stock market. AMC could crash tomorrow, or it could go to $2,000, right? We never know. I'm just presenting you guys this information. Now, the main trade that I do want to point out to you guys, it's not too late for this trade, but it's not going to offer you the same exact upside as it does offer me. Now, this is a debit spread. You are essentially buying the right to sell 100 shares at a certain price, and then you're giving up that right? That's a debit spread. And you're buying the 411 SPY puts, or you're not, I did, for June 25th. I bought the 411 puts, I sold the 410 puts. So each one of these, and I do have 5, has a max gain of $100 a piece. So that is a $500 max gain. I spent $50 on this. I bought them at 10 cents with a max gain of $100 a piece. That is a 1,000% max gain. I am up 130% on this trade. I spent, like I said, $50. It is worth $115. Now, where you make the full 1,000%, $50 into 500, is if the S&P 500 closes under $410, which is only $3.61 away. If you factor in the futures, then it's gonna be, you know, closer to that mark, right? We'll probably open at 410, 411, somewhere around there, I would imagine. Now, that is a great trade. I still do think there's a lot of upside here. You're still gonna get about a 400% upside if you do make this trade at this time, which is not bad in the sense of a 400% return. It's still a great return, right? But also, I did do a SPY for July 16th, and I do like these a lot more, guys, just because there's more time. And I got a July 16th debit spread, bought the SPY 396, sold the 395, and it is very simple. I will show you guys right after I get through this example of how to do a debit spread real quick, so you guys know. If you need to keep going back on that, just keep rewinding it and watch how I do it. But essentially, I am up 8.33% on these. I spent $60, same exact logic. Like I said, sold or bought the 396, sold the 395 for July 16th. Average cost, I spent $12 a piece. So this offers a little bit less than 1,000% if the S&P 500 closes under $395 by July 16th. Like I said, I like this more because it has more time, and it's very hard to try to predict when you will actually see a crash or correction. Like I said, if you hit it on the head, you can make a ton of money. But nevertheless, this is still a great trade. It's only up $1 from where I bought it, so I do see a lot of potential in this one in particular. Now, going to the option chain to show you guys the debit spread before we take a look at other ways you guys can potentially make a ton of money, hedging for the downside, right? Buying puts, using inverted ETFs to your advantage. Now, I'm just going to use the June 25th. I don't think you should buy the June 25th or anything like that, but how you do a debit spread and how you know exactly what you are paying before you actually do it, you would essentially buy one that is, let's say, the 407. You'd buy that. If you're on Robinhood, it's very simple. I'm looking to switch to Robinhood, but right now is not a great time. It takes a couple days to do that, but I am going to be doing that. And then you'd sell something like the 406. It comes up, put debit spread, you're spending $15, and all you need to know is if the S&P 500 closes under $406. So it could close at $405.99, and you would make $100 per contract. You were spending $15 on those, so you'd make $85 a piece on, if you sold 5, you'd make $85 times 5. That would be your max profit. But the great thing about this is for $15, you can get any trade that is close to the money. If you wanted to buy these outright, it's going to cost you $172. Now, I'm not sure the exact math, but you could buy a lot of these for $172 and potentially have a far greater actual, gain on these as far as how much they would pay out than just spending $172 for one option that may or may not expire worthless. Now, you can actually get out of these trades as well, and I will show you guys that right now. And that is the opposite, right? So if you bought, like I did, $411, you bought the $411 puts for obviously June 25th. You have to be on the same expiration date. You would sell the ones you bought, buy the ones you sold. It comes up your total credit. Like I just showed you guys, that is literally what they are worth. It comes up $23, and then you just sell out just like this. You might have to adjust the bid the bid, whatever you want to sell out for, or the ask, I should say. But nevertheless, that is how you sell out of the position, and that is why I am doing debit spreads, just because everything is so expensive. Now, take a look at the UVXY. This is one of the best ways to hedge your portfolio as well. This is an inverse ETF, or a volatility ETF. So when the stock market goes down at a rapid rate, especially, this ETF will go up. Now, there is a downside to this, and the downside is it is pretty expensive, but you can do the debit spread strategy with this as well. It doesn't offer as much potential gains because you're going to see it fluctuate a lot more. If the stock market bounces, you're going to see the UVXY go down a lot. If it craters, you're going to see this shoot straight through the roof. So you have huge potential to make a lot, but also lose a lot. Wow, I couldn't talk. But you guys can see, even on Friday, these contracts were up 123%. So this is potentially a great way to hedge your portfolio as well as this inverse ETF. And essentially the same exact thing. This goes up when the market goes down, or vice versa. This goes down when the market goes up. And you can even see back in, let's pull it out to March of 2020. You could see this went, I mean, these do split periodically as well, just to make sure there's still money, because they're designed to go down. So eventually they would go to zero. So then they have to split to make the price go back up, right? Hopefully you guys understand that. But this went from about $114 to $253. If you had a 115 put call or 120 call, you would have made like 20,000 if you had hit this move right on the head. So there is a huge potential to make a lot of money. You can see the same thing December 2018, going from about $242 all the way up to $353. That is when we had our last actual correction. We did have a correction in 2020 as well. It was very, very slight and short-lived. Actually, 2021 in the NASDAQ. Also, you guys can hedge your portfolios by literally hedging your largest positions in your portfolio. And puts are a form of insurance. That is why puts are a thing, is insurance. Now, there's a lot of other trading strategies, but that is why puts were ever created in the first place. Now, this is a great example. I own 100 shares of NEO. It is my largest position in my portfolio at 13%. Literally own 100 shares. So this is a great example because one option represents 100 shares. Now, if I thought NEO was going to go down along with the overall market a lot, and I wanted to protect my portfolio, maybe you have a bunch of margin outstanding, whatever the case is, you could buy a put at the money, right? I'm on calls. You could buy a put at the money, so your break even shows up right here on Robinhood at $45.22. So if NEO went to $30, you'd make $1,500 on this option. Your position would be down $1,500, and you would break even on this. Now, I don't like to do it just like this because I like to buy the dip and play other inverse ETFs and the S&P 500 to play the potential downside, but this is a great option if you are heavy on margin, and this will definitely balance that out because there's always a chance that the S&P, these trades, these inverse ETFs, the S&P, they don't actually hit, whereas you can hedge your portfolio in a much, much more effective way if you think it's going to go for an overall downtrend. But that is going to wrap up this video. That is everything I have for you guys. Hopefully you learned how you can make a lot of money by catching a correction or a potential market crash. Let's check back in to see what the futures are doing as of right now. The Dow still down 0.5% exactly. The Japan market's bouncing up 0.2%, but they're still down 3.40%. So a huge drop. It'll be very interesting to see what does happen tomorrow and throughout the rest of the week. So like I said, that's going to wrap up the video. Make sure to check out the links down below in the description for the buy and sell alerts and public. Until next time, I will see you guys later. Take care.